You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about SPIX at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means we are back. I am back from the crazy madness of San Antonio, back here, live and in your ear holes for a little bit of the old volatility viewing, a.k.a. the premier program for volatility traders. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you are binging like madmen these days. We love it. Keep it up. We'll take the bandwidth bills. And of course, if you like what you hear, you want to go above and beyond, you want to join us live for this show, every other show that we do during the week. You want more than just a pretty much dozen or so shows we're coming at you with now. You want options oddities in your life every Friday. You want pro Q&As. We gave you Tony Saliba this week. Next week, you got Scott Nations coming back. They love it so much, they keep asking to come back. They love it. They love answering your questions. The hot seat sounds like it's a pretty fun place to be. People are liking it. So, yes, you're getting a double dose. Tony this week, Scott Nations next week. So get those questions in now. Man, do we line up the hitters for you folks just to come in and ask your questions away. You want to play along with that? You want to get access to all the great giveaways? And man, did I load up on some sweet items for you folks down at OIC this week. Part of the reason to go down there was just to get you guys some cool stuff for your pro trading crate. You want to get in on those as well? Theoptionsinsider.com/pro is the place to go. Or if you're really cool, don't tell anybody. You can go to /secret club. That will begin your journey to the dark side. And let's see who's joining us on this dark side journey through the world of volatility. First, let's go out to the sleepy, the quiet, the tranquil shores of Maine, where yesterday, while I was traveling, while the cat was away, the mice were playing. I got to say, he and the unclest of Mike's did a fairly decent job, all things considered, over there, holding down the hot seat yesterday in the option block. He is the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. Rock Lobster, welcome to the show, A. And B, how freeing, how liberating was it to not be under the tyranny of my big cheer yesterday, sir?
Yes, exactly. The benevolent dictator was resting yesterday or conferencing. yesterday, I believe is the term.
It's like Stalin's away. Maybe he's ill, and you got Trotsky running the show. Yeah, that's kind of what you were up to yesterday.
It was something like that, yes. Although Tucson did a good job of the hosting chair. You know, he felt the pressure a little bit. He felt the pressure.
Tucson was crushing it. I got to tip my cap to him. He kept the show flowing. He made sure there were transitions. He made sure there was enough content. As he realizes, it's not an easy thing to do. And so
no, you got to pay attention. You just can't sit here and just pop off and be a smartass like I normally am. Basically, you actually have to try. You have to try.
Next, I'll upgrade him. I'll test his hosting mettle. We'll make him go from show to show and see if he could switch gears like that and have new guests and new topics and go back to back. Like maybe, I don't know, option block straight into crypto. See how he can handle that. I think that might blow his mind a little bit. So maybe that's...
of course you pick crypto for him.
Yeah, of course. That's the most fun one. Of course. But yeah, that might be a little bit of a bridge too far for Uncle Mike. But an able job nonetheless. And also joining us this week here, holding down the MIAX hot seat, my dinner companion. Just saw him in person for the first time in a couple of years just this week. None other than the Oracle of New Hampshire himself, Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to the program. Have you recovered from your sojourn to San Antonio, sir?
Everyone was asking, but it is true. Mark exists. And we...
I do. I am not a robot. I am not the android they have supposed for 15 years now.
Yeah, and not a talking head. He actually has a body. He wore a black shirt and a black pants and 100-degree sun beating down.
Yeah, it was a poor choice. I will admit that was a poor choice.
And so he could go in and steal all swag from everyone. That was one of the best swaggy conferences that we've been to in a while. But my voice hurts, but I'm back. Met Simon Ho. The brains behind the
brains, the Spike's father himself. Yes, he was there as well.
Yes. John Smolin and Matrix, Jordan Naylor and Ryan Radigan. It was a great trip. A lot of people down there. Everyone was in good spirits to see one another, and it was fun to go out on a dinner date with you and some of the other folks. So it was a good time, Mark.
You'll be happy to know my wife insisted I take a COVID test the instant I walked through the door. And fortunately, I am free and clear right now as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we, surprise, break down the week that was and indeed still is from a vol trading and trending and analysis perspective. And man, Rock Lobster, I go away for a couple of days. You guys freaking broke the market, but I come back. I'm back for one day and all is right, baby, because everything is rocking and rolling to the upside. A dead cat bounce, I'll leave that up to you to decide. But you know what? It's a well-timed dead cat bounce. We got some fun stuff to discuss on Options Oddities coming up a little bit later today. I will say this little bit of a bounce today put a bit of a smile on my face for some of those trades. Remember, I was doing short-term stuff. It was all expiring today, listeners. So this was well-timed, if ever there was. So you want more details on all that goodness, how our trades are looking green today, stay tuned for Options Oddities a little bit later in the show. I got a feeling the Rock Lobster's got a smile on his face today as well. What are we talking about? Well, after day upon day upon day of sell-off, listener, it seems like we couldn't find a bottom out there. A little bit of a rally today. S&P back over 4,000. 4,020, right as we're kicking off the show here, up about 2.3%. The Dow playing the laggard, only up a paltry 1.3%. That's still, 420 handles. And the NASDAQ up nearly 4%, about 3.75%, about 430 points. Still shy of 12,000, about 11,800. But the NASDAQ, they've been coming for it for quite a while. So any green out there is probably welcome to the bulls. I'm sure Tesla. I'm sure Tucson, wherever he is right now, is celebrating appropriately. Is this have some legs? I don't know. Maybe we'll get into that in a little bit. As we kicked off the show, we had VIX cash at pretty much exactly at 29, listeners. That was down pretty much exactly 2 points from where we were this time last week. Spikes was still lingering over the 29 handle. It was about a 29.65 when we kicked off the show. Puts it down a little over 2, about 2.1 points from where we were this time last week. And VVIX, a vol is at about a 115. That puts it down about 5 points. Still kind of frothy. Remember, not that long ago, right into the start of the pandemic, so beginning of 2020, that was considered 120, 125 was considered kind of the upside band for VVIX. Once you got up there, you knew things were frothy, you had to pay attention, and also probably wasn't going to hang out there for long. It was going to probably retreat back down to the par level, maybe a little bit below. So we're still hanging out at pretty frothy levels. But then, of course, we blew all the doors off all of that because we were north of 120 for the better part of a couple of years. But for the pre-pandemic era, the 120, 125 level was kind of the upside ceiling for a lot of VVIX out there. Speaking of VVIX and our friend the Viking, aka VSpikes, ticker symbol VSPKE, if you're looking for it, listeners. That's weirdly unched from this time last week. It's at about a 150.5, which is pretty much unched on the week, which is kind of interesting. Let's go around the horn. Let's go out to the land of New Hampshire to the MIAX hot seat. First off, let me just say, Mr. Andrew, you missed a delicious dinner we had down in San Antonio. Matt and I and some folks went out to a delicious French steakhouse on the river, and Matt teased me with delicious hot cheese being carved onto French baguettes because he knows I'm lactose intolerant, so he had him carve it right in my face. I got to say, it looked pretty delicious. Matt, was it as delicious as it looked?
That's the kind of guy I am, Mark.
He's like, look at this cheese, Mark, right in your face.
and where did they carve it? Right in front.
Right in front of me. It's perfect.
I don't think people could really understand. It's like a full round of cheese. Yeah, they're melting.
If you don't see it, it's hard to describe. It was some serious cheese, and it looked delicious.
The French know how to do it. So yeah, it was everything was awesome that night.
All right, cheese aside, sir, what is catching your eye in these somewhat volatile markets, sir?
You're asking me to now I'm in food.
Now you're hungry.
Head back to volatility. So this, we talked back in the advisors option, and Chris Hausman said, 400 was on its way. He was right, but it kept going. Is this a dead cat bounce? The only one of my indicators that is showing we're going to continue this is the contango. The slope, that put call slope that we track, that has a little bit of a bounce, but it's not broken. We draw these trend lines. So everything's bounced a little bit, but the only contango has gone through the trend line. So I need some more before I'm going to call it a real rally with some legs. It's looking like a dead cat bounce right now, but you never know. Give it at the end of the day, tomorrow, if these, we do these forward volatility relationships, we do a contango, and just look at the actual implied volatility. Has that broken out of a trend? No, it's still kind of in the uptrend, but getting down towards the support. So, Mark, my call is cautious, but it's looking a little positive. But I wouldn't say we're going through it. So it could be a dead cat bounce, but we're getting up towards the trend lines. We have one that's broken through. Give me a couple more, and then I'll call it a real rally with some legs. But I can't make that call right now.
Yeah, it's kind of hard to get too enthusiastic on this. There are still a lot of dire things out there, but the contango is the only indicator you have that this is not a dead cat bouncer. Interesting. Go out to the rockingest of lobsters. He missed the delicious hot cheese. There were, I will say, some of the dinner entertainment, Mr. Rock Lobster, was Matt regaling us with stories of drawing, shall we say, adult pictures on your trading jacket on the trading floor, sir. So you were present in spirit during our dinner. Aside from missing all that fun, sir, what's lighting up your tape in this crazy week?
Yeah, you had to pay attention. I think there might have been a couple of days there where I might have been a little woozy.
He said you had a beige jacket. You wore a beige jacket. That's got to be the ugliest jacket ever.
Yeah, I'm trying to remember. We definitely had black jackets, beige jackets. I'm trying to remember.
You switched to black because we were drawing all over your light color.
If you go to wear a beige jacket, it's like you're wearing a sign saying, "Please draw and violate my jacket."
Grab a Sharpie and mark my jacket up. Yes, but we did switch to black at some point, and thankfully, I didn't have to deal with the slings and arrows of the pit. But that's okay. I could torture the pit in my own way by messing with the trade allocation.
See, I had a black mesh jacket, so it was black and it was mesh, so no one could draw on it, A. And B, it was kind of nice and breathable. That mesh was fantastic. Changed my life.
Yeah. They can still hang shark fins on you and stuff like that. So you weren't You weren't totally immune because that mesh really catches a paperclip nicely.
You did have to watch your back on the floor. I will say this, yes.
If you do want to hang some sort of, let's just call it a not G-rated item on the back.
Not safe for work things. We left this out of our tales from the SPX pit, Mr. Andrew. The legion of items people would leave dangling from your trading jacket during the day. None of them were safe for work.
So besides that, yes, I think, I don't know, can't remember. I'm not sure if my pit was the first pit that Matt was in. Was that your break-in pit, or did you come from? You didn't come from the Picos.
No, that was my break. That was my break-in pit. I had a backer, and he was in a different pit, but that's the one I went to.
Yeah, and you were there for a long time, right?
Yeah, like 13 years.
Yeah, and then you just kind of move upstairs and ran your whole show.
Yeah.
That's what happens. See, that's the difference between two guys that know how to trade and then one guy that actually is somewhat organized when the bell rings, and some guy who's running out to the nearest bar when the bell rings. So Matt ended up with ORATs. So I shouldn't complain too much, but nobody's going to cry me a river. Let's put it that way. So anyway, as far as vol goes right now, is this what I'd like to see is, I think the biggest reaction here is that Powell, now that he has his job back for another 4 years, I think he talked a little lighter, but consumer confidence, terrible number today. The market be going straight down. A lot of stocks. Put it this way: when so many stocks are in single digits, it's hard for them to go lower. You look at all these stocks that were like $70, $80 last year, and $90, $150, right? And they're 8, 9, 10, 11. So once the stock's down 90%, that's a long way down. And I think the biggest part of the sell-off is I think they finally took some of these COVID multiples out of the big names like Google and Amazon and stuff like that. And they realized that they're just going to go back to kind of normal growth patterns. And I think that gave the Q an extra kick down. And of course, then that gave the SPX an extra kick down. So we erased 2021. That's what I saw on all this. Like, okay, 2021 did not exist, basically. So all the stimmy, all the this, all the Fed crap of them just sleeping on the job, basically, which is what I think they did. Like these guys, it's their job, and the government's pumping $10-15 trillion in the economy, and they're still out there buying mortgage-backed securities every week. Hey, what do I know? Anyhow. So, is one thing is I'm not getting is, as I look at it right now and I'm pulling it up, is from a vol point of view, is do we have that kind of nice contango curve yet? And I have to say we do not. The curve, as Russell Rhodes would say, is flat, 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 flat. There's less than 40 cents between VIX and the futures out to July. So this rally is still, there's a potential for what we'll call some kind of, confirming leg. But from a vol point of view, the May future opened this morning, 29.95, I think. And it's 29.40 right now. So 60 cents, it's not a big thing. The fact that the VIX cash came in, so a little bit, you got the weekend coming, and the reality is we didn't keep crashing. So all that's normal, but it's not like nobody's coming out and just wildly smashing the bid, I think, yet to drive vol lower. So I think this is really only the let's just call it the first leg of the dance, so to speak. I don't really see a lot of confirming vol, although the curve is definitely went from like a solid backwardation yesterday when the sentiment, I think, was pretty horrible, to a flat curve today. So, okay, you got that going for us. But other than that, yeah, there's not much else, except for some stocks are green that were basically, it's $3. It goes to 330 today, 10% move, big deal. It's like there's a lot of that stuff going on. At some point, I think some of these stocks make pretty good bargains down here. But as far as what I don't like is like treasuries are getting smashed. That means yields are going up. So so bonds up, treasuries down, so our stocks up, treasuries down. So at least we have kind of the normal relationship is back, right? People pile into stocks and they sell their treasuries. And yesterday was the opposite. Treasuries were flying because people were getting out of stock. So hopefully the Fed is, at least that's a signal that the Fed has to do what they do. And then the market's just deciding on the level. So I thought erasing 2021 was a pretty good target, and we got there relatively fast. So the question is how much of 2020 do you erase? Do you get back to the pre-pandemic level? Because we're going to just have a storm with all the inflation that all the runaway spending. I mean, realistically, it's like 2 years of runaway spending at least that's contributed to this. So, I mean, the first part, because the economy contracted by 10 or 15 or 20% in a month, like some drastic number, because they threw everybody out of work. No surprise. You just take everybody and you stop working. What's going to happen? And then the fact that they know everybody's going to go back to work, and they still continued with this, inflationary, like fit spending madness and all this other kind of crap. So, like, it's not really a surprise what's going on at this point. So, as far as the market goes, I would say the curve is flat, so it's taken some of the heat out of, but there is still, let's just call it, there's lingering doubt in this rally still, I would say. Lingering doubt.
Lingering doubt, indeed. Well, there's no doubt that the futures are moving around a wee bit. In fact, it's funny. It's pretty much like we're back to exactly where we were 2 weeks ago on the futures curve, because last week we were up about 2.9 to 3 points on the May future and up about 2.5 points in June. This week, we are down 3 points when we kicked off the show in the May future, down almost 2.4 points in the June. So it's like the last 2 weeks, nothing has happened. We are hanging out. Obviously, the underlying level has changed a little bit from a pure slope of the curve perspective. Hanging out right back at that level. Mr. Matt, you were saying the futures are one of the few signs you're seeing right now that this is not a dead cat bounce. So what is catching your eye out there? Any surprises in the vol surface this week for you, sir?
It's the VIX curve, but it's also just the contango of the SPX. It hasn't come back to flat yet, but it's getting there. You know what I was doing too is I was just looking at the shape of this sell-off, and it looks a lot like 2018. Just kind of how it went down fast, came up, went down, and if you liken this to 2018, it's about exactly where 2018 got down to. And it was interesting when Andrew was saying, the highs of 2020 were 325, so that would be a pretty good correction. But if you're just looking at what happened from 2018, and it feels a little bit more this time, but if you're just looking at 2018, it looks like we've played that out, and there's a lot of similarities in the look of the vol and contango and slope to that. So there is an argument for calling a bottom right around here. It would be the 2018 bottom. So that was one of the interesting things that came to mind, Mark.
Interesting. So earlier you're saying only one indicator says it isn't, but now you're saying maybe there is a bit of a argument for a bit of a bounce. That would be interesting if that was it. We had all the sell-off, and it was all in the span of like a week or two, and then we're spent. We're a spent force out there. Intriguing stuff. What do you guys think? Well, we'll get to what you guys think in a little bit when we get to our question of the week. Right now, where are you folks BTFD? And maybe it's around here, which we'll see, which again is back to our right around 4,000 level. Mr. Rocklopser, you were just talking about the VIX futures curve. Any surprises lurking in store for you out there this week?
I mean, as far as like we got kind of backward. I think the thing that was kind of surprising was we were having 3% intraday moves, and VIX really never got above 34. Some of the moves, like they're pretty heavy moves. So you thought that you would see a little bit. So one thing that was, I kind of when vol when VIX isn't going up and the market's moving a lot, that generally means, again, like I'm just going from a floor trader days, like you're not really worried about things ripping in your face. The biggest problem of when you're a floor trader was, you sell calls, right? And, and then you're like, okay, that's fine. The market's going down, whatever, I'll sell calls and that's cool. And then, you hedge, you buy your stock and all that kind of stuff. But then all of a sudden the rip comes and, and like your calls just, you're like, whoa, wow. Cause you get the crazy rip and you thought the vol you sold was good enough and you clearly were wrong. So, at least in this case, it felt like the liquidity provider didn't have that issue, right? They didn't need VIX to go up a whole vol to really expand hugely. They had good prices already, but maybe I think there were some put sellers there as well. So you never saw that big expansion from people afraid of the rip, as the short answer. So when you're trading something, you're always kind of think of, you have to kind of when you're a floor trader, you have to be a little like Gretzky, you have to price the next move, not really the current move. And usually the liquidity provider is pretty good at that. So without letting VIX go up as much as it could have, based on the 3% moves, there at least there was not the need for a liquidity provider to drive, because VIX cash is a very broad indicator as far as all the options that it sees. So they were clearly somehow buying options somewhere because they didn't need they didn't feel the need to expand volatility, or there wasn't the liquidity demand to expand volatility. So that's a good sign usually that there's kind of a one-way ticket in the direction. So as of right now, that's why I think VIX is coming down to 29, which is still, we would say at any other time would be a relatively high number. But it's not right now. I think it's just kind of, I think it's still kind of fairish. And until the market can digest fully what the Fed's trying to do, because I believe they've changed their mind several times, basically every other week, they kind of change their mind on how they're going to approach this. And that just jerks the SPX all over the place. So from a VIX future point of view, like moving from just the backwardation never got very severe, not more than a couple of points. Normally when you see these crazy sell-offs and stuff, like VIX shoots way up and the short-term vol gets insanely bid. It did not happen as much this time. So I would say that if you're looking for another indicator that, things start to stabilize, I can't say the market can't go down again, but, maybe we just don't go straight down to, 3,000 SPX. Or 3,750, which is where we started 2021 in. And obviously, oil stocks and retail, and there's a lot of other sectors that are holding up the SPX that have done pretty well in 2021 and 2022. So it's mostly just tech that's been getting just absolutely annihilated. So, until we see something change, but like I said, the only way for VIX to go lower is to see lower numbers. And right now, we're at I would call it at a 5 out of the last 10 days. We're still not at a 10-day low, not even close in vols. So market's not quite done yet on all this. Like I said, it's still it's the first leg of the dance.
The first leg of the dance. That completes our first leg of the show, as well as we keep on rolling into the options landscape. I was talking to all the Spikes guys this week, as Matt mentioned. Simon was there, Tom was there, Shelly. I saw pretty much all of them were floating. A double dose of MIAX. They were in Chicago right before that for an event. So I got a double helping of all of them. We're going to get Simon back on the show soon. Tom's coming up back on the show again. So it's going to be fun. A lot of things they have cooking. Simon was whispering that he thinks the ETFs that are the missing part of the trifecta of volume over there. They have the futures, which are the underlying for the options. But as we've seen with VIX as well, you need something else to be kind of the catalyst for the volume there. And that usually tends to be the ETFs. He thinks they're pretty close to approval for the ETFs and Spikes land. Then you have that triumvirate, right? Then you have all three pieces of the puzzle there. And then, of course, they expect really some interesting things. Also, looks like some notice that maybe MIAX going public soon, which is kind of interesting out there as well. So a lot of big things happening in the world of MIAX. Right now, the Spikes futures, or Spikes options, I should say, Still waiting for ththose ETFs. We're seeing pretty much the same paper that we saw out there this time last week. Top position are the May 50s, followed by number 2, the June 70s. Number 3, the June 25 puts. Number 4, the May 25 calls. And number 5, the July par. So there are still some of those weirdo upside, which I want to get to with Matt in a few minutes. First, let me break down some of the VIX paper. VIX doing a little bit of paper out there today. 499,000 contracts on the tape as of right now. So just a tick under 500K listeners. The ADV also looking a little bit firmer. It's up to 527,000 contracts. That's up exactly 50,000 contracts from this time last week. And given today's numbers, looks like we're probably going to see that go up again. In terms of what's going on out there in the top positions, the size positions right now in VIX options, it's been a huge swing over the last couple of weeks, as you might imagine. 2 weeks ago, we were 70-30 calls over puts. Right now, it has swung completely the other way. It is now 70-30 puts over calls this week, which is also kind of fascinating. It cost you 126,000 contracts to break into the top 10 in VIX right now. That gets you to the May 35s, the first of only three calls in the top 10 right now, which again is somewhat indicative of where we are right now in the vol landscape. If you had some calls on outside of these crazy pars and above, which maybe even those we could talk about in terms of taking those off. But if you had a lot of calls on, probably some folks taking those off over the last week or so, and that is reflected in the size OI out there. Number 10, like I said, $126 of the May 35s. Number 9, 128,000 of the June 22 puts. Number 8, our second of 3 calls, 128,000 of the May 30s. Those are going out next week. Number 7, 129,000 of the July 20 puts. Number 6, 130,000 of the June 21 puts. Number 5, 142,000 of the May 20 puts. Number 4, 146,000 of the June 24 puts. Number 3, $170 of the May 24 puts. Number 2, $185 of the May 25 puts. And rounding out the number 1 spot yet again, hasn't changed an iota in the last couple of weeks. It's been 253,000 contracts for a while. It remains that this week as well. That is, of course, the October 75s. We have seen now dramatic evidence that this guy is not taking these off. He needs a much more aggressive move to the upside. He needs a VIX in the 40 handle or above, probably even start taking these off. So right now, still number 1 with a bullet, the OX 75s, which gets me to my point. We love to have Matt on during earnings season, but there's another addendum I wanted to discuss with him today because we have been seeing a lot of, shall we say, interesting upside call paper in VIX of late. This is the first week we're in our top 10. We are not just festooned with pars and 110s and all this other nonsense going up out there. But I know, Matt, you've been kind of back testing those trades of late and maybe dabbling in them a little bit as well. And maybe you have some interesting thoughts on the efficacy or perhaps lack thereof of putting on these, let's say, the June pars or the SEP 110s. What are your thoughts on these kind of junk VIX calls you've been playing around with, sir?
So, I love those. And it actually allowed me to sell some 40s and 45s. So, it's not the greatest, shall we say, spread. But again,
you're selling the 45s and buying the pars.
I know. But on a big ratio.
I love it.
But you could pay for a lot of those out of the monies. Like people just boo-hoo them, but you could pay for a lot of those with a few calls. So you get a little credit, and then you have 10-to-1 calls or something like that. So they were fun. I did get a little nervous. I'm not going to lie. But those they performed okay. They performed best at the beginning when. They went from very low to doubling, almost tripling, but then they kind of just hung out around there. So I'm going to have to go back to the old data back tester and look at the best time to get off of those, because it seems like if I'd have got off a little earlier, I'd been doing better. But, again, my point on these really far out of the money VIX calls is, it doesn't have to go there. It just has to get people worried enough to buy some of those to get some units. So it was fun to have, Mark. It was a good experiment, and I'm gonna do some more number crunching on them. Is it
an experiment you think you will return to, or are you done with your garbage VIX calls, sir?
Oh no, I'm but you can't do it now. You got to do it.
You got to wait for the reset.
Months, when no one's thinking about them anymore, and they go 10 cents. for it, and they could be even 6 months out or something like that. So they were fun. They were fun to hold.
You've been playing with some SPY and SPX garbage puts too. Which one do you like better? The garbage puts in the S or the garbage calls in VIX?
That's a good question. Well, I have to say put. I mean, puts are always your friend. Those actually are, they're garbage puts, but they become very real. If you think about what Andrew was saying, if it goes down to, where it was right before COVID, the COVID crash, I mean, that's 320s. I mean, those are nice puts to have, again, just in your portfolio. Sell a put spread against it, buy 10 of those and don't think of it, or just have them. Those are not that expensive. Those are like less than 2% a year drag. So it's nice to have a bunch of those on. So I would say I'd rather have the puts than the calls, but the calls are fun. The calls are fun too.
Speaking of garbage calls, this morning, as of today, of that 499,000 contracts, 50,000 of them are the NOV 85s, Mr. Matt. Someone paid 70 cents for those this morning. Are those a little bit too meaty for your garbage call play?
Oh yeah, I'm paying max 25 cents. So
this guy's not playing 70 cents 50,000 times.
Yeah, I'm not going to do that.
Yes, that's our big trade for today, listeners. Of the 499,000 contracts, 50,001 are actually the November 85s. A whopping freaking 70 cents for these. It says spread, but I think maybe the other leg might just be. Yeah, I don't see the other leg against this here. I'll have to go look and see. But wow, that's a lot of 70s. About an hour earlier, someone traded 25,000 of the May 25 puts. So that could be a funky, crazy 1x2. But I don't think that's the case. Either way, that's our number one trade today. Number two, 39,000 of the May 25 puts. Number three, 25,000 of the May 26 puts. Number four, 25,000 as well of the AUG double. So maybe that's the other leg. Maybe that's the 1x2. I'll have to go look. No, that was 2 hours later as well. There's some weird stuff afoot out there today, listeners. The number five, also 25,000 of the SEP 60. So the other leg of this, if it's 1x2, could be any of these. I'll have to go dig and find out. Yesterday, we had a little bit more paper on the tape, 639,000 total volume. 32,000 was our big trade. That was the June 35s, followed by 27,000 of the AUG 35s. Interesting, when we get these vol pops, people aren't just piling back into the pars and other nonsense. They're actually buying some, shall we say, relevant strikes for a change. 25,000 of the May 30s, 23,000 of the May 40s, and 22,000 of the May 28s. Rounds out your top five for yesterday. Let's go out to Wednesday. We had a pretty active day on Wednesday. I'm not seeing the totals here for some reason. Wednesday, though, was around that same level. And the big dog on Wednesday, 59,000 of the May 45s was the big dog on Wednesday, listeners. Let me pull it up. Yeah, 558,000 was the volume on Wednesday, followed by number two, 42,500, the May 47 halves. Number three, 21,000 of the May 30 puts. Number four, May 28 puts, almost 19,000 of those. And rounding out the top five, 18,000 of the May 42 halves. Tuesday, around that same volume. It's been close to 500,000 just about every day this week, if not more. 528,000 on Tuesday and the big dog on Tuesday was 36,000 of the June 22 puts. Monday, 8:10 on the tape. So far, that's the big dog of the week. That, of course, was knocked off by some crazy numbers. Palantir screwing the pooch that morning. A lot of names are just not looking good from an earnings perspective. We'll get there with Matt in a little bit as well. The big dog on Monday, that 810,000, 110,000 of it was the June 24 puts. Wow, that's a lot of put paper. Number two, 93,000 of the June 21 puts. Maybe a bit of a vertical. Number three, 59, almost 60,000 the May 25 puts. Number four, 36,000 of the June 25 puts. And rounding out the top five this week, 33,000 of the June 22 puts. Mr. Rock Lobster, what are your thoughts on the options paper we saw out there in VIX land this week? And what are your thoughts on Matt's little dalliance into the garbage VIX call, sir? Did it inspire you? This is where you hit the button, sir.
You did.
Yes.
God, I was the first one.
It wouldn't be a show without that. Yes. Now I'm back. Now all is right with the world.
I was so trying not to be the first one. But all this Matt talk with all these out of the money calls, I had to start looking. And
you were digging up some garbage calls.
I was actually trying to dig up some obscuria. Well, you know what? That's what you're trying to improve the quality of the show when I'm muting. That's kind of the deal. But as Matt well knows, and like from a floor trader point of view, your perspective on buying options is much different, right? Because you're buying stuff so you could sell it later, basically. And you also know that upside stuff, when you buy it when VIX is relatively low, and you can hold on to it because it just vol goes up, then the options stop decaying. So you can kind of hold on to that thing. You can also find ways to finance them. VIX puts are a great way to pay for a lot of upside calls because vol goes up, then it goes down. So I do that. It's kind of a bread and butter type trade for financing, any kind of downside SPY or upside VIX. So I don't think that's a bad idea at all. The key part is, I think what Matt said is, the vol doesn't have, like he said, it doesn't have to get up there. Vol, VVIX just has to explode, and you're like, okay, that's fine. My 50-cent calls are $3.50, $4, and I'll take it. That works fine for me. So I think the biggest thing is expectation of the trade. And generally, my rule is like, if I buy some juice like that and I make money on it, and I'll ride it, but once it's down 20% from the peak price, I just get rid of it. And then I could just go back and look at it again if I feel necessary. Because you can kind of like, oh wow, because the problem is like, okay, I bought these calls and then they blew up. And okay, now they're off the peak price. Like, well, they were up there, so I'm not selling these, right? And then you watch them go from 4 to 3 to 2 to 1 to, and then you're grumpy and sad. So I just find that easier as a retail trader. Like, okay, I was up a lot of money. I'm not up as much, but it's still green. I'll take it and I'll move on. So I find that a relatively easy rule for me to manage stuff like that when you do get that pop, because a lot of times when volatility starts to go up, it tends to do so in kind of stair step. You get that huge pop and then it kind of levels off a little bit, then huge pop and levels off a little bit. And if the move just isn't really realized, you start to see a pretty rapid decline in that kind of option. So I don't think any of that is, as long as also you can learn how to finance those trades. And you don't finance them by just selling more puts in the SPX. There are other ways to do it. That's why the vol products are so great, and probably why so many people are pissed off at VXX for not, for kind of letting the product get broken. So I'm looking at spikes now still as an alternative to VIX for the same thing, because they provide financing mechanisms when vol goes down. All of a sudden your VIX puts go up a little bit. You've got some upside now, and woohoo! When you're off and running, and you can hold on to your upside if you want for the duration. So there are lots of ways to create that kind of trade. But I don't think Matt's crazy at all by buying that junk. Right now, the junk is pretty expensive. Like right now, what a 100 call cost probably is what normally a 50 call would cost. So it's like that stuff I think is a little expensive to try that. Realistically, when vol's up here, you're actually just trying to get rid of what you got, I think. But and then wait for the next cycle. So as far as action though goes, I did see a lot of VIX put action, and I'm just wondering how many series are going to get burned here. Mark and I were talking about the 25s and VIX 25 puts that they have a shot for this cycle. They have a shot maybe. But we still need volatility to come off a little bit, and the reality is, it's like it just has a hard time doing it, and that's the reality. So even the 27 puts today, I was looking at those; they're off their high price. They were actually trading 50 cents today at one point, and now they've come off that price. So I thought the 27 series to be a couple points in the money this cycle would be a shoo-in, but after the last 2 weeks, like, oh no. Not even. So historically, 27 is a pretty hard level to settle above. But I think that's now going to kind of be a struggle. So we'll see. We need a couple of days of the market not doing anything. And 2% moves are not going to get the VIX to go down. So if we have a 2% down move on Monday, VIX isn't going to go down. We have it on Tuesday, or even a 2% up move, VIX won't go down. So the reality is you need smaller, the waves to get lower, the amplitude to become less, for VIX to start to drop. So until that happens, we're kind of watching this movie continue to play out as it is.
Speaking of the movie playing out, one of the big drivers of all this vol we're seeing out there has been just the continued crap on the earnings front. It seems like one name after another, just surprising to the dark side. I mentioned Palantir. That's one of the ones we were watching on Oddities. They kicked off this week by really just surprising everyone that they screwed the pooch pretty hard. A lot of other bigger names coming in behind that, just one after another, just blowing the doors off to the dark side, which has been interesting from a vol perspective. Coming into this week, the season had been looking pretty meager from an earnings vol perspective. Week 1 was at 67%. Week 2, 86%. Remember, 100% listeners is if everything moved exactly as much as they were pricing into their straddle going into their announcement. Week 3, though, 127%. A lot of that is to the downside, but again, it's just vol. It's all we're looking at. We don't care about direction. So a lot of that is surprises to the dark side, which means the whole season right now averaging out at about 102%. Mr. Max, when you're not talking to me, you're busy over there in Orat's land crunching all this earnings data. We're seeing a little bit of juice back on the screen out there. A lot of this to the red, to the dark side, as I mentioned. What's been catching your eye out there from an earnings vol perspective this week, sir?
Yeah, and the implied earnings moves have really gone up. What you were talking about, a little older version, but now, we usually see about a 5.5 implied earnings move on average, which is to say what we do is we take the straddle and we figure out how many days are left and apply our distribution to what's going to be left over, and we isolate what's going to be just for the day of earnings. And that's usually about 5.5%. And now it's gotten up to 7.7% this week, which is as high as I've seen it. So, and that includes the COVID crashes and all the things. So they really jacked this up. And you're right, Mark. And like what Andrew was talking about too, some of these stocks have just been hammered from the triple digits to the single digits. Did they even stop in the double digits? I don't know. But earnings is real again, and at some point, earnings have to be looked at, and when the interest rate starts moving and going up, that really hurts the growth stocks, because the growth stocks, you have to discount their earnings out years out. And if your discount rate goes up just a little bit, that's really going to hurt those stocks. So I think you're seeing that in the market right now, and it's really moving things around. And 27%, that was a high return for straddle owners. Now again, it's kind of like what Andrew was saying too. It's now the vol is so high, it might not be worth it, but straddle owners did well. And if you listen to this show, we always talk about weeks 3 and 4 as the best for the straddle owners, and that's looking to be true in yet another earnings season. So you mentioned Palantir, Duolingo on the positive side. Mark, with your many languages that Duolingo today popped off. They were expecting a move of 12.9%, which was a big move, but they got 35% move up. It's actually 36 now. So there are some that are popping off to the upside. And what I'm seeing is a lot of those stocks are younger stocks, like Duolingo. This is the first earnings that we've been through in that stock. But yeah, for the most part, this has been a pretty bloody from a performance, but good for option holders, Mark.
Good stuff indeed. Really quickly, any interesting earnings trades come across your radar? You guys have been calculating, the long short calendars, long and short straddles. Anything jumping off the screen at you that looked really crazy?
Oh, yeah. Thanks for asking about that. I totally overlooked so we have this earnings trade report where we have back tested a lot of the calculations that we have in our earnings report. And what we're finding is that calendar, as Passarelli would say, is one of the best ways to play these earnings events. The interesting thing is, like, some of these So when you put on a calendar, you're selling the front month, you're buying the back month, and you basically want the stock to stay within this range, respectable range, and have the front month go off and still own the back month. What was happening in some of these stocks that did poorly, the volatility went up so much that it went outside of the break-even range that we had estimated, but we didn't estimate that big of a pump in volatility. So some of these calendars went outside the range of break-even, but still actually made money because of the big moves. And I think Palantir was one of them, and just Netflix could have been another one. Just huge moves, and the vol popped so much that the models that we would generally use, it went outside of those and was profitable. So that's what we've been seeing. The calendars are actually doing decently, not great, probably around a break even, but for this earnings season, that's actually saying something. So yeah, thanks for reminding me, Mark. But yeah, the calendars, remain, the trade that keeps you in the game. There's a defined loss, and they can do well even when you might not expect it. And we also break down the calendars by which week. So we break down earnings season by the weeks, right? 1, 2, 3, 4, 5, 6, and the later you get into the option calendar or the weeks, the better the calendars tend to do. So we've still got some good trades ahead of us, I think, Mark.
Good times indeed. Let's look really quickly as we come up against it. Listeners still have to do the crystal ball really quickly through our favorites, the new inverse and levered VIX products. SVIX was at about a 10.5 right now. It's up about 1/4 point from last week. Seeing some paper out there about 526 contracts. That's above the ADV of 429. So it is slowly but surely growing in terms of size positions out there in SVIX land. The big dog are the May 11s, 389 of those, followed by number 2, 310 of the May 7 puts. Let's do a top 3. 246 for number 3 of the May 8 puts. And then down to UVIX really quickly. That is the levered 2X VIX product. That's at about a little bit shy of 20.5, about 20.40 right now, down about 2.5 points on the week. Today we're seeing some decent paper, 1,346 contracts on the tape. The ADV out there, 1,240. That's actually down. It was over 1,500 on our show last week. It's down about 300 this week. So ADV actually coming in. Today's number is a sign that probably going to go back the other way. By the way, in top positions in UVIX, there is one size position that stands out. Number 1 out there, 2,229 of the May 35s. That's interesting. That's almost 3x the number 2 position, which is 800 of the SEP 15 puts. So May 35s looking pretty sizable out there. They go the way of the dodo next week, so we'll see how those work out. Really quickly, Matt, before we get to the crystal ball, we haven't had you on in a while. Have you had any thoughts on these kind of newer additions to the vol space, the inverse SVIX and the levered UVIX, sir?
Not a lot. We get we back test these, and we've had some we've had some people using it. It's a little bit difficult when they switch the ratio on you for the back testing. But I dipped my toe in that WTI SCO stock, and it did well for a while, but it's just kind of sitting there around 5 now, and a little bit below 5. So I think these levered ones are very tough to trade. People that really read the prospectus and know these and understand how they move around certain events. There's a lot going on, so I always caution against these. I'll trade the VIX options a bit and kind of leave it. Now that VXX is gone, it makes not gone, but you know what I mean. It makes it a little tough. So I UVXY tested out pretty good in our back tester, so that one's all right. But that's how I look at it, Mark.
And let's see how we all look at vol, because it is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball, the portion of the show where we try valiantly to guess where vol is going to be next week. Our chat's asking, where's the logins? We missed the logins. Hey, you know what? I just got back, guys. I'm new to all this hosting stuff again. I don't know what all these bells and whistles and knobs do here. Got to relearn them all here in the studio. But you're right, I did forget to fire up the logins. So I know for a lot of our listeners like it, blasting some logins. So we'll see. We'll see if we get Mr. Loggins back. Depends where Vol is next week. Speaking of where Vol is right now, looks like the sell-off, or I should say the rally, mitigating a little bit over the course of the show. Vol creeping back up a little bit. Spikes is now back over 30, about 30.15. That puts it up pretty much exactly half a point from where it was at the start of the show. VIX cash was at about a 29. Even when we kicked off the show, it's about 29.60 or so right now. So that puts it up about 2/3 of a point almost as well. So Vol firming up a little bit, not a ton, but a little bit there. That means, let's see, where were we this time last week? It was me and the Meatball last week, and I was feeling more Vol than him. I was feeling 32.35. So we were there yesterday, not so much today. Again, that shows how fickle the volatility gods are. Mr. Meatball thought we'd be in the 40s earlier this week. We didn't quite get there. I'm trying to see, where was the high for the week? It looks like we topped out close to 35, 34.91 this week. So not quite there. And then his prediction for now was 31.31. So he's closer than I am, but none of us are within the range. We have a 29.80 on Frank. That's not bad, Frank. Pretty good. He's still within, well, let's see, you're close. No, you're farther away on Spikes, but you're close, about 0.3 or so from VIX cash. That's not bad, Mr. Frank. Again, it's not our 0.1, but hey, I'll tip my cap to you. Closer than I was this week. Bunch of other listeners were all over the place. We'll go through all of them, listeners, and just Frank leapt up to me. It looks like he was the closest out here. All right, that means we have no winners for this week's. That means let's go out to the MIAX hot seat and give them a chance to go first. Mr. Matt, sir, what are you feeling for this time next week?
So I think we might test 386, and I think that's gonna be the bottom in the market. But I think we're gonna hit, if it hits 386, I think the VIX will get somewhere in the 33.4 is my call for the VIX.
Sounds like the new studio is coming along well, sir. I can hear him behind you. Yeah. I can't wait. I can't wait to see what it looks and sounds like pretty soon out there. All right, Mr. Rock Lobster, same question for you, sir. Where are we hanging out from a vol perspective this time next week?
Yeah, I don't disagree with Matt. I think it's easy for us to try to test that lower number, just because VIX is 30. It's only 3 days in one direction. So I'm gonna, as much as I'd like vol to be lower, I don't think it really will be. So I'd be surprised if it was lower than 27. My positions would like it to be lower, but I don't think it will be. So I'm going to say more like 27.85 for VIX.
No, so a wee bit lower out there for the Rock Lobsters, 27.85. And I got to admit, I was kind of feeling what Matt was putting down earlier. I was thinking, I hate to do this. I never really like to do this. I always give the Meatball a hard time for doing this, but I kind of like where I was this week for next week, 32.35. So I'm hanging out there. So that's your market for next week, listeners. 33.40 from Matt, 32.35 for me, which is, of course, the correct one, and 27.85 for the Rock Lobster. All right, that's going to do it for our broadcast week. For all of our on-demand listeners, I want to thank all of you for joining us out there. And before we go, Mr. Meatball, or excuse me, Mr. Rock Lobster, folks want to hit you up. They want to learn more about all things vol. Where should they go? What should they do?
Optionpit.com. Optionpit.com. I think go to our mentoring page. You get all kinds of checking out how to create all these cool trades. If you want to buy those junky options and learn how to hedge them and find ways to finance those type of trades, Option Pit Mentoring. If you listen to this show and you say Andrew's the most handsome man in options, you will get 10% off. 888-TRADE-01. There you go.
Oh, Frank is listening live, and he's angry at you, Mr. Rock Lobster, because apparently he picked for this week 27.80, so you scummed him by a nickel. So he's accusing you of scumbaggery in the chat, sir.
That's okay. It would not be the first time. It will not be the last.
Our chat is very quick to point out the scumbaggery. They accuse me of that all the time. They think I scum Luigi. It's really the other way around. All right. And Mr. Matt, same question for you, sir. Folks want to learn about, you guys have all sorts of new bells and whistles under the hood over there at ORAT. So folks want to kick the tires for themselves. Where should they go? What should they do?
Well, first I need to go to get my mentoring from Andrew about these junk calls, how to handle those. But there's no way I'm going to type in Andrews Hansen, so I'll pay the full amount.
Pay full freight.
Yeah.
Well, you don't want to lie to poor Ted.
Yeah, we got some killer stuff. I mean, if you haven't seen ORATs in 6 months, you haven't seen ORATs. We had some great stuff and great stuff coming down the pike. We put a stock scanner in before our option scanner, and they talk to each other, and then we have a full analysis package, and it lights up. What are the cheap options? And we look at the skew and just all kinds of stuff. I can't even get into it. And we're starting to get positions in from all different types of brokerage clients, and then telling people how to put their exit strategies in, and we alert them. So there's a ton of stuff to make trading easier and more informed. So that's where we're going with it, Mark.
There you go. You can check it all out for yourselves. ORATS, ORATS.com is the place to go. And you guys know where to go to learn more about spikes. MIAXoptions.com/spikes. They're adding a lot of cool stuff to that page all the time as well. So if you haven't been there in a little while, you might want to check that one out as well, including links to a cool show like this. What more do you need? Like I said, that's going to do it for our on-demand broadcast week. For all you cool kids in the Secret Club, hang out, get a beverage. We'll be back in a little bit. The Rock Lobster and myself to break down the mad week that was, and indeed insane morning that it has been. Over there on Options Oddities, how are all those trades we're watching? A lot of them expiring today. How are they looking? We'll get to that. What kind of weird, unusual activity do we find for this week? We'll get to all of that as well. And then we'll see you back here next week. Another episode of Volatility Views. Stay safe out there, everybody.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you SPIX Volatility products. SPIX options and futures are traded on the SPIX Volatility Index, SPIK, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.